Equities now tumbling following another possible escalation of the trade war. How much more could markets crack? Joining me today, Todd Gordon, founder of tradinganalysis.com. Todd, welcome back.
Thanks, Daniela. Nice to be back.
I was going to say no shortage of news today. I'm sure you've had your hands full here. The S&P 500 falling by 1.8%. That's as of noon this Friday, following China's now announcement of new tariffs. How does it play out from here, Todd? How do you see it?
Wow. We could all probably use a breather after this week, but I don't think anyone had a tougher week than Jay Powell. But yes, listen, I made some adjustments to my portfolio. I've been really trying to stick with the bullish side of equities. I did lighten up on some positions. I actually took some inverse ETFs in the S&P. I added to my gold. I continue to hold bonds. I think it's time to get more defensive here. It's summer, and we've got to keep that in mind. This is the last week in August. Yes, there's a lot going on in the news cycle, but you got to kind of put things through a filter here. If this was happening in March, okay, we'd have to be a lot more engaged. But this is summer, so let's just not get too ahead of our skis right now. There is some technical damage being done that I tried to address today, but again, let's wait till fall really to come in before we change our tune here.
Right, because we have seen equities tumble, earlier this month. So is the general investing atmosphere just more on edge, causing markets to become so sensitive to news more than other times?
Absolutely. Is it illiquidity in the summer? Is it, could it be another thing? Everyone's blaming the trade tariffs, on this. Right. But if you look at the S&P, the way I'm actually positioned, the way I see the market from my technical point of view, this is kind of the lens, the filter in which we look at the market to get context, which is the Elliott wave theory. This, for me, looks like a classic fourth wave triangle. All that means, guys, is like 5 swings, lower highs, higher lows. I think we're going to see consolidation here through the summer. And if you look at the bottom part of the scale, if the chart's coming up on the screen, I mean, it's in maybe even the end of next year that we're going to see sideways price action. The uptrend has been lost ever since January of 2018. So it's not like the tariffs derailed the rally. The rally's been derailed for a year and a half now, over a year and a half.
All right. Well, you mentioned, Todd, you've added to your gold positions, the metal climbing almost 2% now.
Yeah.
So what was the driver behind gold? Was it Jackson Hole? Was it the China news? Was the metal reacting to something bigger here?
It was interesting watching the gold market and the dollar react through Powell's statement as he was speaking in Jackson Hole. The dollar sold off. I think we're starting to see some yen buying because we've seen a lot of commodity currency selling, like the Australian dollar, Norway, Kiwi, which puts a bid into the dollar. So at that point, I didn't want to kind of look at the long side of the yen. The dollar sold off on what the market perceived to be a little bit more dovish, I think, than they expected out of Powell, which put a bid into the yen. That, for me, is a sign to go into the, that's a sign to go into the gold market. So bonds continue to go. Gold continues to go. From a technical point of view, last time I was on with you, Danielle, I put a live GLD trade on the options
people
market.
Love that.
It was fun. That trade worked perfectly. And in fact, I know we're not set up today to do it, but I would actually do the exact same trade. We're in a nice little wave 4 pullback here, looking at the gold futures. From an Elliott and a fib, getting a little technical, but all you need to do is bottom line it. Upside target, 1576, I think, in this move. Yeah. And then if this thing really gets going, that green arrow would point you to 1708. So, wow. Yeah, I think we have some real. This is the heart of the third wave. I think this is where the gains really happen. It's a factor of everything.
So blowing past 1600. I was going to say, so 1600 definitely in the cards for you.
I would play it. I mean, I have the trade on. I added to my GLD in my portfolio, longer term managed portfolio, and the options market here. I don't have the trade on yet. I will execute probably here on Monday. I want to see if there's follow through. in the S&P and the downside. But yeah, it's just we're seeing real risk aversion here. Again, it's August. We've got to put that disclaimer on there. I've only traded for 20 years. I'm still early in my career, and I've seen a lot more quiet summers than busy summers. And I would actually chalk this up to be a little bit of a quiet summer.
All right. Well, no, I feel you, Todd. And thank you so much. It's exciting times. Let the weekend begin. We need it.
Absolutely. Yeah, that's for sure. Thanks for having me on, Danielle.
Come back soon. Todd Gordon, thank you so much for joining us. And thank you for watching this edition of Kitco News. We will see you here again on Monday.